Good evening. It's June 7th, and I wanted to have a discussion about crashes in the stock market. So we're going to talk about stocks and bonds today. A little deviation from our normal crude oil talk. And the reason I want to do it is I was watching the markets on Friday and the big drop that happened in the afternoon, and it brought me back to 1987. I started the markets in 1986, and I was sitting at my screen in 1987 when the crash happened. I remember distinctly Friday, October 16th, the Friday before the crash. The market was way down, just like it was this past Friday. And we got called into the boardroom after the big drop on that Friday, and the head of Prudential-based securities came on the squawk box and said, "Gentlemen, this is the opportunity of a lifetime to buy. This is a fantastic opportunity." Obviously, these executives are not traders, and Monday was the biggest drop ever in history. So when I watched the market on Friday afternoon and the big drop, it brought me back to that time in 1987, and I said, wow, there's a lot of similarities in the current market to what happened then in 1987. So I want to go through them. I want you to be prepared that if the market starts falling apart tomorrow, that you don't just think it's a good buying opportunity, because you should be prepared to defend your position. So in 1987, like I said, that Friday was the big drop. Monday, it started getting weak early on. And at that time, there was a lot of program trading. So people were mimicking puts using futures in the market. And this was all done, this was early on in the days of automated program selling. So what you saw is the futures started to drop, and portfolio insurance would kick in, so that would mean the computers would automatically sell to hedge their positions. And that led to a lot of other things, a lot of other selling. Retail started selling, institutions started selling. Eventually, market makers started backing off, so there was very little liquidity. And as that happened, the market just fell apart. And it just kept cascading down and down. Another thing that people don't know about 1987, the crash on October 19th, is there was an operation against Iran's oil industry that day. So there was a geopolitical conflict where the US was shelling two Iranian oil platforms through a dispute. So the parallels to now are crystal clear. The other thing that was happening at that time is in 1987, the stock market had been way up. It was up substantially in 87, and at the same time, bonds had fallen into a bear market. So something we're seeing now, bonds in a bear market diverging from stocks which are in a big bull market. When the collapse happens, market makers disappear and the market's free to collapse. And it just started cascading lower and lower and lower and ended up down substantially. So I want you to be aware of that. Actually, several of the other big market declines, 2000, 2008, they all started on a Friday and then accelerated on the Monday. So this is a common theme. So when you see the stock market down 200 points on Friday, you have to be a little cautious and guarded on Monday morning to protect yourself. And be aware of the geopolitical side too, because as you may not know, there's an escalation going on in the Iran war with Israel. Israel bombed Beirut, which was a red line for the Iranians. Iranians have responded this evening, bombing Israel, and we'll see if it escalates further. But crude is up, and the S&P is down a further 30 points. So it's all sort of starting to unfold like we saw in 87. And I think people should be awfully careful. You know, I'd say every crash is different, but every crash has the same DNA. You get a parabolic rally, 87 and 2026. You get bonds selling off for months while nobody pays attention. You get a geopolitical shock involving oil. We had that then, we have that now, we had it in 2008 as well. You get to Friday before the market drops hard and everyone says, oh, it's just a healthy correction. It's a good buying opportunity. We have all four of those right now. In 1987, it was Iran and the Persian Gulf. In 2008, again, it's Iran and the Persian Gulf. But now it's an actual war. The market is showing you the playbook. Your job is to decide whether to play it and whether to decide to protect yourself. So I just wanted to give you that wisdom from my beginning of my career to see if you might tomorrow find yourself in a position of whether to buy the dip or hold on and see if it's a crash.